You've been dabbling in investment properties or would like to get started, especially in flipping, but how about those flipping taxes when you sell? Someone may have said something to you like, you should 1031 exchange that property. Why? To avoid the taxes. Now, whenever there's a profit, Uncle Sam is there with his hand out looking for his tax money, but where there's tax, there's usually a way not to pay it or at least defer it to another day or to another never. And that's the idea behind a 1031 exchange. Now, what do we say to the god of death in the IRS? Not today. So in this video, we're going to go over the basic rules of the 1031 exchange, and at the end, how I and other investors put it to its highest and best use to avoid paying taxes. Those are dollars that should be yours. My name is Mike Pern. I'm a Metro Detroit real estate agent. When I'm not having a ton of fun helping families find their homes or sell their current homes, I make videos on all things real estate, Metro Detroit, and Michigan. Subscribe to stay updated, and let's go. My background is I'm a 22-year real estate agent and have represented buyers and sellers on thousands of real estate transactions and investments. Another term you may have heard this be used is a like-kind exchange, although 1031 exchange is the more prevalent of the terms as it refers to that part of the tax code that's written on it. Now, whenever you sell an investment property, you generally have to pay capital gains tax on the profit from that property. Now, here's an example. If I buy a home for $200,000, let's say I rent it out for 5 years and sell it for $300,000, that's a $100,000 gain. Now, I put a new roof on for $10,000, which I get to write against that $100,000 gain, but that still means that $90,000 profit is fully taxable. Now, because this is not a primary residence, the rule of fives does not apply. And that's when you live in a property, primary residence, for 2 of the last 5 years, you don't have to pay taxes on a lot of that income or a lot of that profit. So in this case, you'd pay taxes on that $90,000 profit, which is anywhere from 15 to 20%, or in this example, $13,500 to $18,000 in taxes. That is a bucket full of money. That's just a lot of money that should be yours. Using a like-kind exchange or the 1031 exchange, you can defer paying those taxes so long as the profit portion is used to purchase part or all of the next property. So now let's go into the definition of a like-kind exchange. A house is like another house, but can I upgrade to an apartment building? Yes, because of the intent of use. In the same fashion that a house is not like a house if the intended use is different. So if I sell a rental property and I buy my own next home, that is actually not a like-kind exchange, even though they're both houses. Also, if I buy a second home or a vacation home for myself, that's also not a like-kind exchange. It does revert back if your intended use of that vacation home is for income purposes the majority of the year. Think like Airbnb or VRBO. Also, it doesn't qualify if you're selling real property or real estate for personal property. So if you have this great painting or an amazing stock that just ran up, even though they're both considered investments, they're not like-kind investments. Also, the 1031 exchange is disqualified if the properties are in US territories or are foreign real estate like in Europe. If I sell a farm and buy a commercial property, they are like-kind because they're both income producing. Here are a couple things that are not taken into account in the definition. The 2 properties or more don't also have to be of the same quality or dollar amount. They don't even have to be in the same city or even in the same state. As long as both are in the United States, they don't have to be held with the same property rights or deed types either. So let's play the scenario out. Now you have your property under contract and you're about to go to a closing. You then use what's called a qualified intermediary to hold the funds so they don't touch your account between the 2 closings or between the 2 sales. Most often, title companies are equipped to handle this, but not all are, so ask before you go with one. Then, when you go to close on the new property, the qualified intermediary puts the money into the purchase of the replacement property. Now, I want to say it twice, and I really want to stress it. You don't take the money into your account. The minute you do, you have disqualified that 1031 exchange, and even if you're buying that second property, you now owe the taxes on the gain. No matter what you do with the money after that, you cannot take control of the funds. Part of the process is going to be assigning the contracts to the intermediary company, the sale contract on your current property and the purchase contract on the next one, so they can execute upon them themselves. A common question I get is, can I do this with multiple properties? And the answer is yes. So you can sell one property and have a profit of $500,000 and buy 2 investment properties for $250,000 each. And it works the other way as well. You can sell 2 properties and buy one, usually a bigger property. So if I'm selling 2 properties, one with a profit of $250,000, one with a profit of $100,000, I could take all $350,000 of profit and put them into one property at or above $350,000 as the purchase price. Now, before we get into my highest use of the 1031 exchange, hit the like button if you're getting value from this, and then don't forget to subscribe as we drop videos every single week. Now, let's take some time to talk about timeframes, which is super important. You've got to have a specific amount of time to complete all transactions, and those timelines must be adhered to or you're going to lose that benefit completely. So you've got 45 days from the closing of the property you're selling to identify the next property. The IRS says identification is defined like this: an unambiguous description of the replacement property. So it can't be a house in Royal Oak or a house in Livonia. That can't be the description. Use a proper legal description of the property that you're intending to purchase, or at least intending to put an offer in on. You don't even need to have a fully negotiated contract yet, but by using the legal description, it is not unambiguous, it is extremely specific. So the action step here is getting the proper legal description over to the qualified intermediary so they can mark that down. The second time frame that starts running, and it runs concurrently or at the same time, is the closing on said property. You have 180 days from the closing of the first property you're selling to get the other one or ones you're buying closed. And to be clear, that's not 225 days total. Both those time frames are running at the same time. Let's get that up on the screen. Last up, here's how I use them for max effectiveness, or what I think is max effectiveness. I'm a long-term property investor, but I use flips to fund it. I know what every accountant and every tax attorney in the US is yelling at the screen right now, that it doesn't apply to flips. And I'm gonna come back and I'm gonna say sort of. It just depends on how long you hold the flip and what you do with it during that time. The key to this method is renting the flip out for a year or more to make it into an income-producing property first, and then taking it out of the flip category. Last point I want to stress is you're not paying taxes. You always got to pay the piper, or Uncle Sam in this case. You're just deferring them. And I look at it like this: whatever amount that you were going to pay the taxes in, you're taking a 0% interest loan from the government in the amount of the taxes you would have paid, and you're putting that money into active use, which is what a lot of the tax code is set up for. Now, if you're considering getting into real estate investing, we have investment specialists like myself on the team that would love to earn your business. If you're looking for a home or have one that you need to sell, give us a call today and scope out our reviews on Google by Googling the Perna Team Reviews. And if you love the content, hit the like button and the subscribe button, and I'll see you on the next video.